How are you doing? My name is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world, Options Trading Academy. And what we want to really do is really quickly go through like an options walkthrough. So what I want to kind of show you is that how I would want to encourage you to kind of look at a particular play from a 360-degree perspective, as opposed to just a binary perspective, to kind of have more of a non-linear 360-degree perspective of how you want to look at every element of the play before you actually go into it. And one of the things I try to teach you in the course is that you should come up with every reason why you should not participate in the play, as opposed to just every reason why you should do it. So what we were able to do is get Miss Bellarmé to come on and to kind of break down what she may be looking at and what she may be considering. And let's go ahead and just walk through it. And then to give you a better understanding of some of the questions that you may want to ask yourself before you go ahead and go into a play. So let's go ahead and get right into it. So Miss Bellarmé, how you doing today?
I'm good. How are you?
I'm doing great. I'm doing great. So I appreciate you getting on. So let's go ahead and get into the content. So what ticker or play are you looking at?
So I'm looking at Abbott Laboratories. It's trading under ABT.
So it's traded tickers ABT?
Correct.
Okay, so let me put that on the screen. So the ticker's ABT. Okay, so what about this particular company were you attracted to?
So I noticed that they're the company that manufactures the Binax COVID testing kits.
Okay.
So, you know, that kind of drew me to look into the company because I think they're the only ones that have the at-home testing kits. So They have a monopoly on that. And they also have several subsidiaries, one of which is Similac. So they, you know, so the longevity with, you know, Similac coupled with the fact that they're now moving into the COVID market, I decided to look into them a little bit more extensively to see about the stability of the company and the longevity of the company.
Okay, so I know a lot of people are familiar with Similac. That's like I wouldn't say a food program, but it's like a food product for infants.
Correct.
Okay. With the COVID testing, are those tests currently in the market? Or are they in like a pre-production stage?
No, they're currently in the market. So if you go to CVS, Walgreens, wherever, they have they're called, I have several here. They're called Binax Now.
Okay.
And they're two to a kit. And they're the only ones that I've seen. I believe that they are the only ones that are offered for at-home COVID testing.
Okay. Okay. So they might have some type of, I don't know, positioning to like they just have they're positioned to where they're the only company that offers the at-home COVID testing where everybody else probably has to go to like the doctor's office.
Correct.
Okay. Okay. And so is there anything else you know about that particular company that drew you to it?
Like I said before that, I knew that they kind of their main focus was bridging the gap with I don't want to say mainstream medical issues, but like they do, they manufacture Ensure, they manufacture Glucerna. So they tend to focus more on, like I said, Similac, they tend to focus more on at-home products that address, you know, common medical concerns, but are also available for, you know, the average person. So, you know, Glucerna obviously is for, I believe it's for diabetics, and Ensure is a meal supplement. So like I said, I kind of already was familiar with them. And then when I saw that they were doing the COVID testing, I kind of thought, okay, they are positioning themselves to be an at-home accessibility provider. So they're already providing, you know, supplements and things like that. And now they're but they also offer, you know, COVID testing. So the company is kind of geared towards addressing major issues, but for everyday people to access at home.
Okay, that makes sense. So based on your analysis, are you, I would ask you, so short term, are you bullish or bearish on this company from a short, and I say short term, I mean under 6 months? Are you bullish or bearish on this particular share price?
I'm bearish. I think that they're going to be in it for the long haul. Because like I said, even outside of the COVID at home testing, they still have their stable offerings. Mm-hmm. And I do think that considering that they do have the at-home testing for COVID, I think that they're going to position themselves to move into another corner of the market. Because I don't see the. Am I supposed? Can I say COVID or should I say something else?
I mean, yeah, I mean, you can say COVID, you can say pandemic. I think that'll make it a lot easier.
Okay, so I should have asked that before. Sorry.
That's cool.
So I do think that they're not going to go anywhere now that they've firmly planted their foot in the whole at home sanitary conditions market. And I think that they're only going to go up from there. I do believe that I do believe that they were talking about, with the whole, third round and, having to get more of those, jabs, that they were in talks of having some sort of like every 6 months, like almost like a vitamin or like, you know what I mean? Like a supplement. That's what I want to say. Like a supplement, because apparently this isn't going anywhere. So they're positioning themselves to offer some sort of at-home quarterly situation to address the different variants that are coming out.
Okay, and so you say short term, you believe the share price is going to continue to go up. You're bullish short term.
Correct.
Okay, long term, are you bullish? Are you bearish?
I'm bullish as well. I think I said bearish earlier. I apologize. I meant to say
no. That's why I just want to go ahead and just go back to it to make sure we were clear on what your analysis was. And let me ask you, with the particular pandemic test, the at-home testing kit they have, they may have some exclusivity right now, but do you think in the future that they're going to be dealing with competitors? Because let me give you an example. We know like at-home pregnancy testing. If you go to that particular department, there's so many tests from so many different, there's even generic tests. So any kind of first mover advantage that a person may have had in that particular space, they no longer have it, to where it's almost like I wouldn't say a loss leader, but they may be, it's really not something that they can really, it's like they don't have any really standalone value, because I don't think there's patents around it. Pretty much anybody can offer that type of test. With this pandemic testing, do you think that any kind of exclusivity that they currently have, they'll be able to maintain that? Because if this becomes a thing, which is kind of what it's looking like, it's going to be a thing that we're just going to have to consistently deal with, and they're going to start getting a lot more people in that same space.
I do. I think it's, inevitable, but that's why I was looking at what they were going to. So they were the first ones to come out with this, with, the at-home testing situation. Okay. And I think that this is just the first step in them catapulting into something bigger. And so that's why, of course, like you said, I don't think that they're going to be the only ones to offer this. I think this is just the first step in many at-home offerings, because they're known for at-home offerings. Like I said earlier, with, the different adult and pediatric products that they have. I think that eventually they will offer some sort of at-home ongoing option with regards to the current sanitary situation.
Okay, that makes sense. Okay, so let's go to their, let me share this out real quick. Let me go to their chart so we can kind of look at their chart from a yearly standpoint, just do some basic technical analysis. So here is Abbott ABT. Make sure it's up. Okay, so here's Abbott ABT. And so what we're looking at on the weekly, on the 1 year, excuse me, is pretty much, it kind of topped out around this, I don't want to say the 130 is where we hit resistance 3 times. So we got the around here 130 resistance. It came down, a gap down. It may have been a bad earnings. We got another 130, almost a 130 resistance point. It shot down, and now we're kind of walking this line. So you believe that this company eventually will move past the 130 resistance and continue to keep pushing up, because you were looking for, like, maybe as an options trader, you're looking for maybe like a directional move. And on the yearly chart, we're seeing that resistance. So would you be looking at, like, what expiration dates on contracts do you think you'll be looking at to kind of play it to move past that 130? And when do you start thinking that there's a potential that it could move past the 130? You think it's going to be around the earnings? Maybe this new variant that they're talking about now is going to drive more demand into that particular company for testing. I don't know if their at-home test can test for that. So what do you think is going to kind of get it past that 130 resistance point?
I think once they, I do think that it will get past the 130 mark. I think with regards to the different, like you said, the different variants.
Okay.
I think that they'll kind of what you were saying. The testings they'll offer different testing options depending upon the variant. So there'll be the forefront leaders in testing for this variant, testing for this variant, because I believe as it stands right now, the testing kits test for the original and I believe the Delta variant. I don't think there's any other options that it tests for. But I do foresee, because I don't think the situation is going to go anywhere. So I do foresee that they will kind of position themselves to be the leaders of, whatever the flavor of the week is. They're offering testing for that variant.
Okay. So we're looking at 130 as being a resistance. If we go to their 5-day, it's been really volatile on the 5-day. Looking at their volume, they do decent volume. They do 5 million average. They've already at 2 million right now today, and we're around 1 o'clock in the afternoon. Okay, so looking at their statistics, they're not a really fast mover because their beta is 0.67. So they're not a fast moving company. So I would consider with this, and this is not investment advice. I'm not a fiduciary. I got to make sure we say that. But I would consider maybe a longer dated contract because you're seeing because of its beta is not a fast mover. So this is really, I'm sorry, go ahead.
No, I was going to say you're absolutely right. The contracts that I was looking at were 6 months out.
Okay.
I definitely don't think it's, going to turn around, anytime soon. I was definitely looking at least 6 months with my contracts.
Okay. So 6 months out, we're seeing the float is really big. That's a relative term. It's 1.75 billion. So it's going to take a lot of volume to kind of move this. And I think that's one of the reasons why it's a slow mover, even though you see companies with this kind of float move like Apple, but there's a lot of, they trade a little bit different. So this is a lot of pharmaceutical companies are slow movers because they're kind of like what we call value-based companies where they're not growth, but they are value because they're selling a drug. And we know the drug game is a very lucrative game to be in. So once they establish a really good category, they just keep making money. So if you look at their margins, they're really decent. The operating margin is decent. They got good cash inside the company, $9 billion. Operating cash flows all are positive. So it's not a fast mover. They're not being shorted. So you don't have to really worry about short attacks unless something negative comes out because their percentage of the float being short is really less than 1%. So nobody's really attacking this company. It's like a big ocean liner that's just going to where it's going.
Right.
So that's kind of how I would view this, but understand that it's not a fast mover. So when looking at contracts, unless they come out with like an exclusive test for maybe this new variant that they're claiming is out now, you probably won't get a lot of demand on the shares in comparison to its float. And you got decent institutional buy-in at 75%. So they're going to keep a really good hard floor here. But like I said, drug companies are really, especially established drug companies, they're more value-based companies. Because we understand that, if you're selling something like, I don't know what they have. Well, we know Similac, everybody's going to buy it because they have infants. And the same thing with the Glucora. If you need that as part of your treatment, then you just got to keep buying it.
Right.
So they're going to just always keep churning revenue. So I don't know when their next earning have the earnings at January 25th, which is right around the corner. So you may get a bump on earnings. So what I would do is I would look at NASDAQ and try to figure out their last earnings. How do they report? And you can also look at Seeking Alpha and you can look at their historical earnings and try to figure out, do they normally bump up on earnings? Because you may get a movement on that, right? So based on seasonality, also based on trends, do they normally get a bump on earnings or do they normally sell off after earnings or do they normally trade neutral after earnings? Because they do have earnings coming up on January 25th. So if you buy, say in the near future, if they do a really good earnings, you can get a bump and that can put you in a position where you may just go ahead and exit and get your profit and keep it moving. Or you may not get that earnings based on how they trade. Also, you can go to websites like Earnings Whisper and just get maybe a basic analysis of where they think their earnings are going to go. But this to me is more of a value play as opposed to a growth. And it's really not a fast mover. Now, do you think there's any, we've been talking about inflation a lot, things of that nature. Any macroeconomic factors that can affect their earnings? Let's say, because they are getting ready to go into earnings. So any macroeconomic factors, do you think maybe the inflation rate could affect their earnings from a standpoint of they may not have the same amount of revenues that they may have had previously because of some macroeconomic factors like inflation?
Right. And I was going to say that I think that with the runaway inflation that we have, I definitely think that it affects earnings, and the fact that the Fed is not tapering anytime soon.
Yes,
I definitely do think that would affect affect the bottom line of the company. However, is that something that would affect, like, is that something that we should be cognizant of in general, like whatever company that we're looking at?
Yeah, definitely, because you want to know whether or not, because inflation rate affects consumer spending, because the consumer has less buying power. And then it also, we got to ask ourselves, about the substitution effect. So, understanding macroeconomics is really, really important, because the companies individually are really a microeconomic situation. So the macroeconomic situation is always going to be relevant, because we got to ask ourselves, if I'm the consumer and I have to make decisions about what to buy, do I still continue to buy ABT products, or do I substitute it for something else, or do I just not buy it?
Right.
And so does ABT say, well, to deal with this, we'll cut our prices, which means they're going to drive less revenue, even though they may get the same number of sales? Or does ABT have pricing power, where they can say, well, it doesn't matter that there's inflation, because we are in so much of a demand, or because of, inelasticity of a demand, or because of our position in the marketplace, we can charge the same amount or even charge more.
Right. And that's what I was going to say. Like, at what point does brand recognition come into play? I mean, again, not to say that they have like a monopoly, but the brands that they have under their umbrella are pretty, Pedialyte, they're pretty well known.
Yes,
and so for me, if I don't have any children, but if I know Pedialyte is probably what I would get if I had children. Like, I wouldn't go to like, Walmart or, something else. So do you think that would kind of shoulder any sort of inflationary concerns? The fact that, we have our core base of customers who are tried and true with, Similac, insured, so on and so forth. And even with these at-home testings, like every time I go, they are flying off the shelves.
Yeah.
And so, like I said, I know eventually they will, two things. I know eventually they will have to, pivot. But the other thing is, by the time that they pivot, I would think that that we would be in a place where, how can I put it, where there wouldn't be as big of a need to test at home, because of, the direction that the government is trying to push, its citizens. So, by the time it gets to the point where there are competitors, will it even be a factor with regards to the at-home testing? You know what I mean? Like, if there's, there's probably not going to be that demand anyway. Whereas in the beginning, again, it was a waiting list to get these tests.
Yeah, you got to just take that into consideration, because when you're looking at like what people call moat, which, you understand the concept of a moat, like you put a big trench around a castle so people can't get in. So when you're looking at a company like this, is their moat their brand, right? Or do they have some type of competitive advantage that other people don't have? Do they dominate supply chain issues at other companies? Because a lot of big companies, especially ones that sell products, they do supply chain wars, and that's how they keep other people outside of their particular environment. What do we think they're operating under to create a moat, or what some people like to use as a moat? I call it a competitive advantage in the marketplace. Some companies, it is going to be their brand, right? So they built a relationship with their customer to where they will only buy their product. And so let me give an example. I'm from down south. You had the issue with Kaepernick and yada, yada, yada. And people was like, okay, well, we're going to start watching football. Okay, I'm from the South. I knew that wasn't going to happen. Because the football is so much of a brand in the South. It's so much of a culture that they're going to pay money to watch football, even NFL football, which is still doing good numbers, because they're football addicted. So it doesn't matter what people say on the internet. I knew, because the NFL they've built such a strong culture around the game of football. It's such an emotional release for so many people. That is their moat. So even as inflation takes place and the prices of the games go up, the prices of the sports packages continue to increase, they're still going to maintain their viewership.
Okay.
So we got to kind of understand how does this particular company compete in the marketplace? Are they competing on price? Some companies are competing on price. Are they competing on brand, where they feel they've communicated to their customer buying our product is superior than another product? What are they communicating on that gives them their competitive advantage so they can offset some of these macroeconomic conditions? Because inflation is going to be real, and we're getting conversations now from people like Yellen that they're going to stop using this language called transitory, which means that, yeah, exactly. So now we know that this is a real life thing now, because they're getting rid of, how language is really important to framing things. They're getting ready to get rid of this language and just kind of come out and say, well, you know what, we're just actually in inflation.
Right.
Yes, ma'am. So we want to ask ourselves these questions. How do we think it's going to impact? Because if, let's say, a person can't afford Similac brand, are there other alternatives that they may buy as opposed to Similac that can hurt Abbott's revenue, because Abbott doesn't really have that brand loyalty like maybe a company like Apple has?
Right.
Yes, ma'am. And these are the things that can affect it, because what we talked about before is we're not looking at a fast mover to where maybe they get a news flash or a news article and we get a 5% increase over the day. Mm-hmm. This is more of a slow moving company. They're very value based. So we got to look for ways in which they can continue just to maintain that positive trajectory over time, because we're looking at longer term plays.
Right.
Yes, ma'am.
So then are you saying that, well, I know you've always, preached volatility, is considering that they're longer term plays, is volatility as important? I know it's still important. Like, you want a company that has some action on it. But since I'm looking at longer contracts, is that something to be cognizant of? Because like you said, this isn't a company that's going to come up with a cure for cancer tomorrow. So it's, for the most part, it's going to be pretty stable, and they may come up with, one or two things that'll kind of maybe get a bump in the market, but it's not going to create any sort of, massive wave in this space.
Yeah, definitely. I would look at 6 months and year to year. So I would look at you can do this on like YouTube. Not YouTube. You can do this on Yahoo. Look at like 6 month close. Look at close from 6 months to 6 months. Look at also yearly close, and try to figure out, where did the price close at from 1 year to the next year? What's the difference between the price action? Where did the price close at between 6 months to 6 months? What's it between the price action? Get a kind of idea of the move. Some people can do the average trading range, and sometimes you can look at that daily. I don't know if you can extend that, but it's really easy just to say at the January mark, it closed at this particular price. At the, June, there's a 6 month mark. It closed at this particular price. And then at the January mark, again, it closed at that price. And you got 3 particular data points to try to figure out where it closed at from 6 months to 6 months to 6 months. Mm-hmm. And try to figure out, what are the ranges of prices, to try to get an understanding of over 5 years, how does it move? And then you can look at year to year. You may have to throw 2020 out of the window, because essentially that's a sunk year for everybody.
Right.
And just get an understanding over the 5 year, because most really well-managed companies, this is a secret a lot of people don't understand because they're caught up in small trading patterns. If you're looking at really well-managed companies, most of them increase over 5 years. They just keep going up. So if you looked at the Visas, the MasterCards, the Apples, the Microsofts, the Facebooks, if you look at them over a 5 year range, they just kept going up. What threw everybody off was 2020. Now people they're starting to reestablish their range again. And so really well-managed companies, their share price just keeps going up. The question is, certain companies move a lot more violently and with a lot more volatility than other companies, because they may be in a growth stage, and other companies may just be in a value stage. They're just value companies. So when you're looking at Abbott, you do want some volatility, but you're not going to get the same amount of volatility here as you would get with something like an Apple, or even definitely not something like a Tesla. So you got to take that into consideration on your contracts, because unless some really outstanding news hits the mainstream, or for some reason the market just starts to really, really value this drug company, they may hypothetically release a drug they may acquire a company that has a really, really important drug. They got I think they got $9 billion in the bank in the cash. So they may acquire a smaller pharmaceutical company. I don't know their acquisition history. That may give them an advantage in the marketplace. That you may see a run on their stock because of that. Because we think now that's going to create long-term value for this particular brand. So these are the things that you got to take into consideration. But just on face value now, do you believe there's enough volatility to where it's worth your while to trade it, based on the fact that you're looking to tie your capital up for maybe be around 5 to 6 months, the return that you think you can get out of it. But it may not be as risky in getting into another company where it could just dump one day because of a bad earnings call.